from sort of experience, what you're looking at for is when it's painful, when it looks really ugly and everyone hates it. That's the time to sort of buy commodities. But when you see there's a high probability of a range of sort of bad news still sort of coming up, if we do see sort of significant falls in iron ore price, say below sort of that marginal production cost of $80 a tonne, then we'll be looking to close out. However, as an Australian investor, with the DLC being collapsed, that's going to see a substantial upweighting in the weight on the ASX 200 to BHP. So the sort of career risk for many fund managers, including myself, for not owning BHP is going to rise when its weighting goes. I think we're expecting it to go to around 10 to 11%. So there's a bit of a career risk, but I think just there's still going to be a bit of pressure going through. Both Rio and BHP also talked heavily about increased costs, mainly due to the tight sort of West Australian labour market. And whilst they're making very good money, even at sort of depressed fall in iron ore prices, that's not going to change. That sort of tight labour market and high costs is still going to be a feature in the near term.
Sure. I know we keep a hawk's eye on iron ore, and of course, why not, right? It's obviously grabbing headlines, but you know, there's activity in copper. There's also activity in aluminium. I was reading some notes yesterday on how Chinese prices for the commodity have hit a 15-year high, and so how do you study the broader implications here?
Yeah, so obviously, sort of nickel, nickel and copper, big sort of industrial metals used in a range of things, from sort of power generation to very topically and very exciting electronic vehicles. There hasn't been a lot of investment in these over the past sort of history, and they haven't found a lot of strikes. So in that environment, we've seen a lot of, obviously that's doing well. But remember, for BHP, that's dwarfed by the size of the iron ore, which is close to 70% of the profits. So whilst it's nice to see sort of higher prices in copper, and obviously the high prices in nickel, you can see by the share price reaction today that that's not the main game for this company, particularly after the moves to spin off the oil stuff into Woodside shares. So that effectively what BHP are pushing all their chips in the middle of the table. We're saying we're going all in iron ore, and we're going all in with China without having that offset of oil and gas. So whilst they're up, it's not really moving the dial as much as iron ore.